Hello, today is Thursday, March 4th, and this is the Sphinx Forex review for today. Housekeeping, Twitter, SphinxForex.com. Upper left corner, you'll have most recent and fundamental analysis reports, and below that, most recent and technical analysis reports. Real-time blog, information is updated in real time. The main box here is just a little quick summation of the site. You can follow us on Twitter by clicking there. If we put any kind of commentary, it'll also index here in the most recent time article. Interested in seeing the videos from the site, just click here. The most recent video will be in your main screen. Also, you'll have an index of all previous videos. I apologize, I'm not feeling too well today. You'll have an index of all previous videos at your disposal without having to leave the site. If you're interested in purchasing the book, there's a link to the pub. You can click this link and it'll take you to the publishers. Real-time quotes and economic data you can find here. Mentorship program, one-on-one with myself in a live setting. All questions, no holds barred. And then Signal service, we should be launching within the next 2 weeks. I did speak with the broker who can fulfill everything we need as far as the exotics go and the oil, the gold and silver, all in a one-stop shop, because a lot of brokers you can't trade commodities like gold and silver and oil and whatever else in addition to Forex. So I have found someone who will fit that bill. Twitter.com/Sphinx Forex. You can be notified whenever I put commentary. I usually give a little summation of the market in the mornings. Then when we put the videos up, we've got 430 people following us now, and I think that's going to increase dramatically over the next couple of days. I expect it to get up to about 1,000, and so the program is really starting to take off now that I'm putting a lot of effort into the marketing side of it. I hadn't been having time to do that with the holidays and then traveling, so we finally got that going. Let's get to the charts. The euro market came on roughly here. It was kind of flat. We came to the zero line, across the zero line to the short side here. Your first trade was set up 1 pip below here is your entry, 1 pip above here is your stop. This candle here brought you in. The stop was not compromised, and then we made a move down. You actually made your money on this move, or you could have took the second one. So there was your first trade, and then the MACD did go above the zero line to set up a long. No new high made. We came back short again. This was not a textbook trade because we technically didn't top the upper EMA, but if you're more of the aggressive type and you wanted to take the chance, knowing a good signal is that the market tried to reverse here and it didn't hold. The bulls couldn't take control of the market. So if you're super aggressive and you've been around the block long enough, you would know that the bulls had a hard time taking control of the currency and the bears took it back. So you could have went 1 pip below, here's your entry, 1 pip above, here's your stop. This big bear brought you in and probably made your money. So that was a more aggressive trade, but however, it's not a textbook. Then we flattened out for the rest of the session. Pound dollar. Market came across to the zero line to the short side. 1 pip below, here's your entry. 1 pip above, here's your stop. We got brought in on either this candle or this candle. It all depends on the spread. And so stop not compromised. Major move down. You got yourself in profit on this candle. You should have break even. Would have been your once you got up this many, you should not have taken the loss on this trade, even though it didn't come to that. But I'm just saying, protect your profits when you're up 25, 30 pips for sure. Do not take a loss. And then the move continued down, and you made your money. You missed that first trade, you had a second one. 1 pip below, here's your entry. 1 pip above, here's your stop. Same move down, bang, you caught it. So you had 2 opportunities during the London session. Long, 1 pip above, here's your entry. 1 pip above, here's your stop. This candle brought us in. This was some ugly action. However, it did work out. Stop wasn't compromised when you got brought in, and then you had a little bit of a pullback here. It was a doji, so the bears were trying to wrestle the market here. They couldn't get control of it, and then the bulls continued it upward. So you should have made your money on that trade there. Then we came back to the short side. No new low. Flattened out the rest of the day. Euro yen. MACD was to the positives, to the plus side, so we're looking to go long. New high made. Market came short. 1 pip below here's your entry. 1 pip above here's your stop. We got brought in on this candle here. Stop wasn't even remotely close to being hit. Wham! Straight big move down. Made your money. Market reversed. Came long. However, the MACD didn't. You're definitely not going to take a new high off of this. Look at that's some news candles more than likely. Yeah, it had to be because look how it came right back down again. So that was scary. I would have stayed. Seeing a big move like this and then coming back down, I would not look at your MACD. I would not trade this currency at all because basically your new high and lows are being set by non-technical related action. So you really don't have a true indication of exactly what's going to go on with the currency, especially trading new highs and new lows. So I would have stayed away after this big move here happened. And then let's look at the dollar Swiss. MACD came across to the long side, so we're looking to go long. 1 pip above here's your entry. 1 pip below here's your stop. We got brought in on this candle, and bang, nice smooth little move up. It took a little while, but it happened. And your stop was not even 20 pips on this trade, so you made a quick 40 pips off of not even breaking a bead of sweat. Nice little move here. You did not have a second trade. Then the MACD came down. It tried to go short, didn't happen. Then we came long again. Same scenario as with that Euro trade. This was a more of an aggressive type, 1 pip above here. We didn't touch our lower EMA, so it was not a textbook trade according to our rules. But again, you can see that the bears couldn't take control of the currency. The bulls continued its move. So if you're more aggressive, you could have got in right here. Although it didn't make a bigger move as the Euro did. So we're not going to claim this as a winning trade because we would not have taken this sticking to all rules. And then we flattened out for the rest of the day. And let's look at what gold did. And it looks like gold was stagnant most of the day. It came down a little bit and it flattened out. And so I think I had put a tweeted this morning that to be careful, it might be a head fake because oil shot and gold shot up heavily into the European session, then it made its way back down. So basically, you can see it took back what it gave up in the earlier sessions, which is basically going to confuse the currency. So that's it for today, and we'll see you tomorrow.